Let's do it.
All righty.
One moment. All right.
I'll go ahead and give maybe a brief introduction of the Groupon Fundera partnership, if that works.
Yeah, that'd be great.
Okay. So first, I'd like to say I'm really excited to be here today to be talking with everyone about this partnership. Really, since the beginning of the crisis, Groupon has been executing a number of initiatives to help our merchants drive, more sales, both during and after the crisis. We've been working with merchants to help spotlight new service delivery models and contactless services and virtual classes and everything like that. But one of the most important things that I think that we've done is really start this partnership with Fundera to help our merchants access critically needed and urgently needed funding to help bridge through the immediate shutdown. And so a couple of months ago, we began this partnership with an introductory email to our merchants. And if I'm being honest, it was probably pretty weird at first for me and for most of our merchants. I don't think that a lot of our merchants really expect to get federally backed financing emails from Groupon. But the response was pretty overwhelming. And I think it's really indicative of the overwhelming need that our merchants have for this funding right now. And frankly speaking, has been probably one of the more rewarding things that I feel that I've done at Groupon. And so it's really exciting that we've had almost 200 merchants now receive financing and, in the order of millions of dollars as part of the PPP program. And I think that given the interest in the program so far, as well as, frankly, the complexity of the program, we thought it would be a good time to have a webinar such as this one. And if you're on the call right now, you probably are either one of two merchant types. You either are interested in getting funding, or you are a merchant who's already received funding and want to understand what's next. And so to that end, I'm really excited about the content that we'll be presenting today, really kind of giving everyone an update of the PPP program, the money that is still available, which is important, and how to apply, and then really helping to simplify a crucial element of the program, which is the loan forgiveness aspect, because I understand that that can be complex to both merchants who are looking to apply, as well as merchants maybe who have already applied and want to understand how to navigate the process. I think we'll also have some time for questions at the end if anyone has them. So without further ado, I hope that gives everyone some context about the partnership. And I think, Justin, if you want to jump right into the content, that would be great.
Sure. So this is another slide we put together. I don't know if you want to hit this one real quick just before we jump in.
Sure, yeah. I mean, I think in terms of, as I was mentioning before, we've had, almost 200 merchants now, receive funding as part of this program. And we've gotten a lot of really strong feedback from merchants about how it's really helped them bridge. And I think that's critical for merchants. It's something that we at Groupon are really interested in because we want to see our merchants successful, and we need to have them weather the crisis. And so to get this, the feedback about how this partnership has helped our merchants get access to funding through Fundera's network, to get access to this SBA PPP program, particularly given all the complexity that's been surrounding it, is very exciting for us at Groupon. And I mean, you can just see some of the feedback that we've gotten here. That I like the second quote really around people receiving the recommendation email from Groupon, right? And probably being confused, honestly, at first, why is Groupon sending me this? But there's been a number of just really great outcomes that we've seen from merchants by going through Fundera, and we're really thrilled to have brought this opportunity to our partners. So.
Awesome. Thanks for covering that. Yeah, likewise, happy to have you to be able to work with you guys and help serve your merchants as well. So I'm gonna go ahead now and jump kind of right into here. Here's a background slide. Maybe we could have hit this at first, but here's kind of who we are. Here at Fundera, I do these webinars on hosted by us as well, and do other ones as too. And basically the goal here is to try to give you guys some content on what is forgiveness, how do you get it, or what are the key rules, what are the most important things on what that you can do now before applying for forgiveness, and so on and so forth. So I'm gonna dive right into the content here. So this is the basic outline. Okay, so as an overall overview of where we're at, the SBA last released this kind of funding report that they put out periodically. And there's still a good amount of funding remaining. So if you are listening and you haven't received funding yet, know that you can still access funding, and Fundera is a place you can go to have us help you through that process. But what's even more notable here is the second bullet, which is that the total number of loans, or the volume of loans distributed, actually went down by a good amount from the previous report to this one, indicating that prior to the expiration of the safe harbor on this past Monday, that a lot of loans were returned. Also, we can see that the average loan size has gone down in this second round, where it seemed like a lot of bigger banks were helping bigger clients get funding. So the main takeaway here is there is funding remaining. If you need funding, it can still be accessed. And generally, to that quote that we just heard a second ago, can be accessed quite quickly. Now I'm going to jump in a little bit more into some forgiveness updates. So the situation, is kind of still changing. When the PPP initial, the application process launched, there was a lot of updates. Almost every day we were hearing from Treasury or the SBA clarifying things. That's since slowed down, but now there are some concerns, I think, that a lot of businesses are having around a couple things, namely the 8-week kind of covered period during which you're supposed to spend this money in order to get it fully forgiven and not turn it into a loan. As this timeline is rolled out, there are people getting loans at the very end of March. There are many still funding now. That 8-week period, stretches out and covers, different timing in terms of, when businesses are reopening, when is the economy opening in my area, that kind of thing. And, if you're a restaurant, for instance, that can't deploy your capital now because you need to hire workers because you're not even open, this gets to be problematic when you want to spend this money and get it fully forgiven. So with that in mind, there's a couple updates here just on the news side of things where, politicians are increasingly taking this seriously. We wish they would take it more seriously and act more quickly. But we have heard from President Trump, Secretary Mnuchin, and kind of the Democrats in the House, as well as some Republicans in the Senate, that this is something that's being considered, and we expect optimistically some sort of action in the next week or two. And we hope that the two changes that get made are this 8-week period gets stretched to maybe 16 or 24 weeks, and that also the 630 period by which you can rehire or re-elevate comp levels for employees to avoid getting forgiveness dinged will also be pushed back. And the goal here is to let businesses deploy this money over a longer period of time, use it, when they actually can, and then help restart, as opposed to paying people while you're still closed or, having severely depressed sales. The main point at the top, and kind of, why we're doing this webinar now to an extent, is that the SBA hadn't released a full application for forgiveness until just last Friday. And we're going to kind of jump into that in detail next. But it's an 11-page application. It is submitted to your bank, and it kind of clarifies a lot of questions that were outstanding up until recently. So this is kind of just a screenshot of the application. It's Form 3508 of the from the SBA. The link is in this presentation. It looks relatively straightforward, but there's a lot of instructions you'll see if you pop this thing open. And I'm going to kind of go into the main provisions now. So these are kind of, if you know nothing about it, here's a summary. Loans, these PPP loans are forgivable either in whole or in part. And that includes any accrued interest, meaning when you receive the loan, you technically start accruing a 1% interest rate annualized. And that can all be forgiven if you meet certain criteria. This typically is a function of two main things. One, how you use the money within the covered period, which is 8 weeks, and we'll get into how exactly you figure out what your period is. But then you have to spend, to get 100% forgiveness, you have to spend over 75% of it on payroll and similar costs that kind of go into payroll, and we'll go into the breakdown of those. Independent contractors that you pay don't qualify. They would have had to file for their own PPP loan as self-employed individuals. Also, EIDL proceeds are netted from forgiveness, and only employees residing in the U.S. are considered in these employee counts, which we'll get into. The idea here being that if you get this forgiven, you can turn it into a grant from the federal government as opposed to a loan which you'll eventually have to pay back. It's obviously a much better deal, and the kind of the provisions around using it on payroll are so that it does what the title of the program is, paycheck protection. So the first thing I think, and the most timely, is you need to consider, what your covered period is. So initially, the guidance was, okay, you get the loan on May 1st, 8 weeks from May 1st is the period of time you have to use your loan funds on the forgivable purposes, so that you may get it forgiven after applying at the end of that period. What this introduces, that concept introduced some complexity around, well, okay, if I got my loan on May 10th and I run a payroll on May 15th and then have another one on, May 31st, how does that work, with my costs? It kind of misaligns the costs and means you have to kind of calculate, well, how did I pay people, part of this paycheck and then all of this paycheck and then the next paycheck? And so what the SBA did in this last application is they clarified that you can use an alternative payroll covered period, which means you can align your 8 weeks to the next payroll period, essentially after you receive your loan. So in that example, you receive it on May 10th, your next payroll is May 15th. That's when you can start your 8-week period. So this is beneficial in terms of, when we get to the documentation needed at the end and start talking about how to calculate some of these forgiveness amounts, will be helpful. And I put in, there's some detail here. It's fully discussed. This is a long quote at the bottom of this page from the SBA's application itself. But this is definitely better for, personal judgment would be it's better for most people. How do the expenses fit in the period is another question. People in many cases haven't paid employees what they, would have normally paid them in the period of time just preceding when they received the loan. And now they're wondering, can I pay back pay, or how do I pay, make that amount up? How does it work when the payroll period lasts, longer than at the, past the 8-week period? And the SBA introduced the concept of paid and incurred costs, which just means, the easiest way to think about it is, if it wasn't incurred, or if it's paid during the period, that's totally fine, counts towards forgiveness. If it's, an instance where your forgiveness period, ends on June 20th, but your last payroll runs on June 15th, those 5 days in between will be incurred costs, but won't be paid till the next payroll. And the SBA allows you to include those as long as you pay those costs out either at the next billing date for things like rent or the next payroll date. What you can't do is, book a bonus for employees, for instance, to the books, to your accounting general ledger, and count that as forgiveness and not pay it out until 6 months later. So I think this is the kind of a real big one for most people, as I think, what we've heard, and Fundera has dealt with a lot of different types of businesses through going through the application process and doing these webinars. And I think a huge question for most people is, what is covered in this payroll number? What do I have to spend 75% of my funds on to receive, full forgiveness, and how should I think about this? And so there's 4 main components, and if you got into the weeds with your PPP application, these essentially mirror, what you're including to determine your average monthly payroll, which then went into the calculation of your loan. So first there's cash comp. Which is, everything from, if you just a salary, it's hourly wages, it's tips, it's sales commissions, it's paid leave of any kind, with the one exclusion being the Families First Coronavirus Response Act leave that is not allowed. Interestingly, they also included dismissal or separation pay, meaning essentially severance. And then what this also means is the next question we typically get on this is, okay, this is fairly straightforward. We know how to count that. What happens if there's, an employee that has $100,000 kind of, annualized rate of pay, and they actually put out a, specific number this time around, which is this 15,385. It's basically $100,000 over 8 weeks. That's the most you can include for forgiveness. So that's an easy number you can kind of go after. Then the other one we've gotten a lot, there's a lot of small business owners, meaning, you're not an LLC with 100 employees, you're an S Corp with 3, or you're self-employed and report your income on your 1040 Schedule C. Your income here can be calculated or can be included as well as part of payroll. And this should have also gone into how you calculated your loan. There's a specific call out here on line 9 of the Schedule A on the SBA form. And you can include that. They basically have a minimum concept of this $100,000 per year rate or the maximum of what you kind of made the year before. The other things that are included are health insurance. These are employer paid contributions, not what's deducted from a W-2 employee's paycheck that they pay into their healthcare. This is all employer paid. Same thing for retirement contributions, and then state and local taxes. These are typically state unemployment taxes, which you pay into that state unemployment fund essentially, and are not any income taxes. Does that all make sense, John?
Perfect.
Love it. All right. The other question is, okay, what else can I use my funds on to be forgiven? So there's essentially 3 categories, and we got a little more specificity on these in the last application. Mortgage payments, or I should say mortgage interest payments. You cannot, pay off your actual mortgage principal and then get that forgiven. What you can do is pay your interest payments essentially, so you don't fall behind on those. Same thing goes for rent. You can't prepay, your lease, but you can pay your kind of monthly rent checks. And then utilities, they actually called out what specifically here is included. The one that I'm a little bit confused on, and maybe we'll get more guidance when they release some FAQs later, is transportation. I think there's a few ways you can interpret that. I think otherwise these are fairly straightforward. Again, this is the note of this: if you received an EIDL loan, that will kind of be netted out of your forgiveness amount as well. So you can assume that's essentially already forgiven. Okay, so basically what this means, here's just a quick calculation of what this means. Say you got a $100,000 loan and you need to use 75% of those proceeds to get 100% forgiveness. Say you then, okay, you work this out. You say, okay, well, I'm actually, this was based on my payroll, which is $40,000 a month. So for 8 weeks, that's actually $80,000. Okay, then I have, $9,000 a month in rent, $1,000 a month in utilities. And, obviously I made these nice round numbers. But this kind of works out to this, okay, well, I spent 80% on payroll. I cleared the 75% threshold. I spent the remainder of my loan on these 2 forgivable buckets, and therefore 100% of my loan is forgiven. Simple as that, except for a couple things we'll get into in a minute. So there's a lot of questions about these potential reductions and the safe harbors that kind of negate these reductions. The goal, the stated goal anyway, of the PPP program is to preserve paycheck protection, to preserve jobs, preserve wages. So the 2 reductions both focus on both full-time equivalent employee reductions and salary and wage reductions. And if you've these complications get to be a little complicated, and we don't have nearly enough time for me to do a walkthrough about how exactly they're calculated, but I'm going to attempt to go over them so that you can understand where you might fall into this. And granted, this is not something you have to do today, but this will have to be done, when you go through your application process to your lender after the period ends, your covered period. So there's 2 potential reductions outside of just not meeting, that 75% threshold of personnel expenses that you have to clear to get, eligible for 100% forgiveness. But there's the reduction based on average full-time equivalency and the reduction based on salary and wages. The first one essentially says, okay, you have this 8-week period, figure out your full-time equivalent employees during that time, and basically divide that by the number of full-time equivalent employees you had during a reference period. Reference period they give 2, and I'll get into a second, but you can essentially compare it to a period in 2019 or a period in early 2020. A quick example is, if I had 10 employees during my covered period and I had 8 during this period in 2019, I'm totally fine. If I had less and I got to something like 0.8, where I had 8 employees now, but 10 at the reference period, then I'd be looking at kind of an 80% being applied to my forgiveness number, meaning you lose 20% of that. Salary and wage calculation is somewhat more complicated, but essentially says that you kind of make a list of your employees, add up look at their wage rates, meaning their per hour or annual salary numbers. You compare those. If there's more than a 25% reduction, then you may have a dollar amount of forgiveness kind of reduced on your total forgiveness amount. Both of these rules can be negated by this safe harbor, which I'll talk about in a sec. So I'm going to I already touched on this a bit in the summary, but these are the two reference periods. You can compare to 2/15/19 to 6/30/19, or January 1st of this year to the end of February this year. Seasonal employers have a few more options to compare to. And one thing I want to note here is, when you're comparing, you're doing the math on, okay, how many full-time equivalents do I have, which is essentially this calculation here. There's also some things that we've gotten a lot of questions about on our webinars, which is, okay, well, what happens if I try to rehire someone and they don't come back? What happens if someone didn't come back, but I rehired someone else? How does this all work? And the SBA actually put in a few specific call outs here, and it's worth kind of giving these a read when you go through the application. Secretary Mnuchin actually went so far as to say, if you try to hire someone back and they don't accept, you have a duty to notify the authorities that if they are collecting unemployment, they shouldn't be able to collect it anymore. I'm not sure how many business owners will do that proactively, but theoretically you would be covered, and that wouldn't apply to a reduction if you try to hire someone back and they don't want to come back. This is also for voluntarily requesting things like a reduction in hours. So the salary and wage forgiveness I talked a little bit about. It's somewhat complicated, but a little harder to trigger than the full-time employee reduction, just because you have to you can reduce all your employees' comp by 20%, and this still wouldn't apply to you. It has to go beyond that. I referenced tables 1 and 2 in this slide, and if you go through the application, you'll see those and how that kind of builds up. But essentially, this is slightly hard to calculate. You have to do it kind of go employee by employee, and then add up the net effect to determine if you have a dollar amount reduction here. I think one of the most important points here is the safe harbor. So safe harbor is a concept you hear in a lot of, somewhat of a legal concept applied to finance. Usually it's like, if you do this, the previous, negative rule does not apply to you. So here, essentially, you have two options. If you say, okay, I've reduced my FTEs from the reference period to now, but I end the reference period, which some people's reference period of 8 weeks will go past June 30th, but June 30th is a date right now that we have in writing. If on June 29th, if maybe your 8 weeks ends June 30th and you've had 7 employees, in your reference period you had 8, and you're looking at having a small reduction to your forgiveness. If on June 29th you hire back someone and go to 8, then you are fine here. Same goes for comp. And since it's not based on actual earnings, it's based on rate. If you had 10 hourly employees, went down to 5, and then on June 29th hired 5 more, you would also clear that wage reduction and full-time kind of employee threshold. So this is important, and this is one, when I covered the kind of the news updates in the beginning, this is one that I think will potentially get elongated, this June 30th deadline, because people are still getting loans now. And if your 8 weeks goes past that, it's kind of unfair for you to have to meet the safe harbor before that. Frankly, I'd be surprised if this didn't get extended. All right, I'm gonna briefly cover, okay, how this process works. So, after your covered period ends in 8 weeks, you'll submit your application to the lender. There's essentially the application you submit and a Schedule A you submit. And then there's some backup calculations also that you have to retain for your own records. Just to reiterate, this goes to your lender, or if in the case that your lender maybe sold the loan to someone else or it's being serviced by another company, it will go to them. The lender has 60 days to process that, essentially, after the application. And then, like I said, the third bullet is essentially, there are a number of records, which I'll talk about a little bit more, which you have to maintain yourself but don't have to submit. And these you have to keep all your PPP records for 6 years, and you may be, I don't want to say audited, but you may be contacted by the SBA or Office of the IG anytime in that 6-year period. Again, I think based on guidance, if you took a loan of over 2 million, this is far more likely than if you took one under 2 million based on guidance. Okay, so here was, in addition, when we were getting your your PPP loan, it was about calculating average monthly payroll, and then figuring out your loan amount, and then it was about, okay, what documents do you have to support that? How do you prove it? It's going to be very similar when it comes to forgiveness, and the documents that you're going to use to prove it are going to be largely be the same, except there's probably going to be a few more people using bank statements, bills, and things of that nature versus IRS payroll forms or end of year tax returns, just giving the timing. But these documents listed here, this is from the SBA. This is what they've said they are going to tell banks to look for. Bank account statements, which shows actual cash leaving the bank account to pay payroll. Third-party payroll service provider reports. We're kind of big in the application process if you're lucky enough to use a company like Gusto or Paychecks or JustWorks or TriNet. Even QuickBooks also created a custom report. We expect these reports to kind of be a different version of these to be created for forgiveness, which hopefully should allow borrowers to simply calculate all this stuff just by pulling a report, at least for the payroll part. The SBA has cited also IRS tax forms, so we think timing again will make these difficult. For healthcare and retirement, it's going to be anything from receipts, canceled checks, account statements. These are also on some payroll provider reports. State and local taxes also may be on those reports, but also these may be immediate filings with the state as you pay these taxes. For the non-payroll costs, it's very similar. There's these reference our lender amortization schedules, receipts, account statements for renting or rent or lease payments. This is very similar. Lease agreements, lesser account statements. I mean, basically whatever you get from your your landlord or whatever can be used to kind of show, hey, I paid this. Here's what I paid out of my bank account. This is the bill. This is the period it's for. Utility payments, very much the same. The documentation that you'll need for your full-time employee calculation to either prove that, hey, I didn't reduce this, or hey, this is what I'm getting reduced by and why, is also very similar to the payroll stuff. It's maybe a bit more based on filings and especially around the employment insurance tax filings. You'll also, one interesting part here is we talked about special situations where this could be where you try to hire someone and they rejected your offer. The documentation there, could even be emails. We're not sure quite exactly what the guidance will end up being for that, but it's it's a little bit up in the air. Kind of use your best judgment, I would say. I know we're kind of going through this a little quick, but these are also records that are not submitted but have to be retained by the borrower. There's a lot of backup calculation that goes into those potential reduction amounts, as well as calculating your loan amount. And this kind of gives you a guideline as to what you have to retain. All right, so that's the end of the presentation. I think we can potentially do a bit more of discussion here and maybe answer some questions that people have. Let me just check the, okay, no questions submitted. John, do you have any area you think that may be of concern to people and we want to focus, or I can kind of maybe go into anything that you heard that you thought maybe it'd be interesting to hear more about? I can dive in.
I think one area where I had questions was around the safe harbor provision. So should you interpret that as if I were to, as long as I'm bringing back the same number of employees before, what was the date? June 30th, I think.
June 30th, yeah.
That then all of that previous period's loan, or the loan is effectively forgiven, even if I'm not paying them for that previous period?
So it's not, the way to think about it is that it wouldn't make it all forgiven, but what it would do is reduce, or it would eliminate this potential reduction. So if you still don't spend 75% of the money on payroll, you're going to not get the whole thing forgiven anyway. But if you do have that, and then you had 10 employees in a reference period, but throughout this period, this 8 weeks, you've had 8, and then on that last day, you rehire 2 people, then you would be able to kind of eliminate that reduction, but it doesn't forgive your loan. It just kind of eliminates a potential negative consequence. And
Got it.
this is a kind of a development where, before it seemed like you'd have to, it was unclear. You'd have to like maintain the same level of employees throughout the 8 weeks, but the revised rule, went at like, okay, as long as you can get back to where you were by the end, then you'll be fine essentially, and you won't be have your amount reduced based on that criteria. The same goes with wages. If you reduced, salaries by 30%, but then your business you're a little more certain where it's going, and on June 29th you raise salaries back to full, then you won't get your forgiveness amount reduced for that reason either. So it's essentially like these are two ways you can be penalized for forgiveness, basically because you didn't protect all the paychecks, which is unfortunately hard to do for a lot of small businesses, just given the lack of demand. But if you can come back to where you were, then you can have, you'd still be eligible for full forgiveness. But it also then defaults back to, what did you spend the money on? You have to get to that 75% to be eligible for full forgiveness.
Gotcha. And I think we might actually have a couple of questions that were submitted now.
Yeah. So I'm looking at a question here. It says year-end bonus for a corporation with a fiscal year ending June 30th. So this one is one that, I've heard a few questions, kind of around this, about how to think about, bonuses, for instance. And like, I've also heard one, where there's a quarter and your quarter even ends during your 8 weeks, and your sales team's compensated on a quarterly incentive schedule or something like that. And, it's this concept of triggering like an outside of, costs that were incurred in another period, but are paid within this period. The application clarifies what happens if you incur costs, and then pay them after, but it doesn't address right now the opposite, which is costs incurred before but paid during this period, which this is an example of. I don't have an answer. There's been no specific guidance on this type of point. I think that, or I'm not going to say I think, it wouldn't surprise me if there ended up being guidance that says that, it switches to more of an incurred definition, meaning, you can't pay out an annual bonus because that wasn't in the 8 week period, essentially. Only a piece of that was probably accrued during that period. But right now there is no rule against it. So I'll kind of stop there, but I might expect this to get clarified, because it is a little weird, you're paying out a large chunk of cash, but it's for the previous 12 months when that maybe falls right in the middle of your loan period. Okay, second question. So this is one we've run into a couple times before. It's, if you applied for a loan, PPP loan, just on the basis of payroll, you're approved and you've received that money, but you say, okay, now I've learned that I could have included rent and utilities in that, initial calculation, and then I could have used that money on that. The way that I understand this works is that you can use those funds still on those other categories, but if you're worried that you didn't get all the loan that you could have, meaning smaller, you got a smaller dollar amount because you weren't, including those in your average payroll, like in loan calculation, you can't, as far as I've not heard any option to do this, go back and return your loan, get a bigger loan, and then spend it differently. I think, unfortunately, your loan may be smaller than it could have been, but you're still allowed to use those funds for rent and utilities, and those are forgivable as long as you still spend 75% on payroll. So the last question here: can I apply for an SBA loan as a 1099 independent contractor? The answer to that is, assume SBA loan means PPP loan, then yes, you can. And we, Fundera ended up handling, tens of thousands of applications in the during the kind of the month right after this opened up, and we saw a lot of these actually. there were, and the way you have to think about it is, if you're someone who works as an independent contractor, you file, you file your, I guess, what you make each year on your personal tax returns. So what this looked like is, it was, you look at your 1040, which is your, income tax form, the Schedule C there, and that gives you kind of like your net income from your self-employed earnings. And that was kind of the basis, which we were then saying, okay, what did you make per month in 2019? And then multiply that by, 2.5. And you can use that to then get yourself a PPP loan and essentially pay yourself for lost earnings during this time. That's all the questions we have in chat. I think one thing I want to come back to is, the two things that are severely like limiting businesses right now is this concept of using the money in 8 weeks, and the concept of having June 30th be this deadline that is falling in the middle of that 8 weeks for borrowers who've received their loans anytime after May 1st. And these are kind of the two main provisions that have now, like I said, been brought up by the president, who described this as "that's easy," to Secretary Mnuchin, who said this should be an easy technical fix, to now Nancy Pelosi in the House, with majority Democrats are talking about, they've said, okay, let's split this legislation, if you want to do it in Congress, out from a larger CARES Act sequel bill, and just do this more quickly. You've got people like Marco Rubio on the Republican side in the Senate, very attuned to these needs. So all things are kind of pointing to these, that 8 weeks hopefully getting pushed out to at least 16. 24 has been requested by a number of lobbying organizations for business, but I think my personal view is that 16 is probably more likely, but would still be really helpful for a lot of businesses, even if it went to 10, 12 weeks. I mean, as you think of like, areas start to open up again, you can now have a longer period of time to make sure you get to that 75% payroll mark. And then, the date that's been thrown around, even proposed for the 6/30 date, would be 12/31. I don't think we're going to see it that late. I think that's kind of way too far for what we've heard from Treasury and SBA, but I think, we may end up with something like September 30th. So the goal there, if those two things did happen, then you wouldn't have to worry so much about how am I making sure to pay people enough to qualify for this 75% if I'm not open yet. You could then kind of align more of business demand with your payroll, and so that's what we hope to see. I'm going to hit one more question, I think, in the chat, and then we can probably wind this up. But okay, so the question is, do you have to use 75% of the loan proceeds for forgiveness for payroll, or 75% of the actual amount spent for payroll? You have to use 75% of the total loan value on payroll to get it 100% forgiven. If you don't use 75%, then you'll still get, what you spend on those categories forgiven. You just can't receive full forgiveness if you don't spend that 75%. And so that's, I think, to hit on again, if we were to lengthen this from 8 weeks to 16 weeks, I think this would be a much less of a concern for a lot of small business owners. Is it would essentially, double the amount of time you have to pay your payroll, especially around if the business is opening back up or anything like that.
Fantastic. Well, thank you, Justin. Really appreciate you giving us a walkthrough here. And as you mentioned before, I mean, how much funding is still left? Like upwards of
100? It's over 100 billion. Yeah, it's let's just see here.
110.
Yeah, 110 billion remaining, and I think my gut tells me if we see 8 weeks get pushed out to 16 or something like that, and we see the 6/30 date get pushed, I think there's probably a good amount of businesses who've been hesitant to take it because they're closed right now, and don't want to take a loan that can't be forgiven because they can't pay it out during 8 weeks, right? So they don't want debt on the books. But if this were to be prolonged, then if you're like a restaurant says I'm closed, I'm not paying employees to do nothing, but then you open up in, a month from now and you have then an additional, 12 weeks to spend that money, I think you're going to see some more demand for this 110 billion. And I think, there's been, we've heard this from business owners that have talked to Fundera, that there's a lot of people kind of in that boat where they're scared to take it because they, it's a lot better when it turns out to be forgiven, right? It turns into a grant, and people are wary of not being able to spend the money, ending up with a loan on their books, having to pay interest. Even it is a pretty good loan. It's the best loan you can, any business can essentially get. But I do think if those changes were made, that we've seen a real slowdown in these loans going out the door, and I think we could see an uptick if maybe next week or the week after, if things can get clarified.
Yeah, that's fantastic context. And I think what we'll be doing for our Groupon merchants is taking this recording and summarizing some of the content in our Groupon merchant portal. So if anyone is out there that still is looking for an opportunity to get access to the $110 billion that's remaining, or particularly as the restrictions begin to hopefully become more flexible to let businesses that may not currently be in operation still viably use that funding, we'll definitely have opportunities to steer our Groupon merchants to Fundera, who's been a great partner throughout this and has really, as I mentioned at the beginning, really helped several hundred of our merchants get access to millions of dollars. So we really appreciate, Justin, you taking the time here, and appreciate everyone for joining.
Yeah, glad we could do it. Hope it was useful for people.
Fantastic.
All right, thanks a lot.
All right, bye.